You're watching Silver News Daily. Subscribe for more.
Silver prices are dropping and most investors are scared. But what if I told you this pullback could be your last best chance to buy before silver skyrockets? John Rubino, a leading expert, believes that we're on the verge of a massive silver rally. But why now when prices are down? Well, stick with me because today we're breaking down exactly why this short-term dip is setting up for something big, and trust me, you won't want to miss out. John Rubino has been ringing the bell on silver for a while now, but the recent pullback in prices has left many investors wondering, is this the end of silver's run and just the beginning of something bigger? In fact, experts like David Morgan are doubling down on their predictions, with silver potentially reaching $40 by the end of the year. But what's behind this optimism? Well, it's not just blind speculation. We're seeing signs from the broader market: rising industrial demand, economic uncertainty, and global inflation that are pushing silver into a position for massive gains. Let's dive deeper into what these experts are seeing that most investors are missing. Silver isn't just another shiny metal. It's a critical asset with fundamentals that are setting it up for a huge rally. Let's break down why. First, silver has been consistently outperforming gold, and there's real demand driving this. Just look at the numbers. In the last quarter alone, silver-backed ETFs saw inflows of over 800 tons, the highest since 2021. But that's not all. Industrial demand is soaring, especially with the surge in solar panel installations, where silver plays a crucial role. China's solar growth has surpassed expectations, with demand for silver in this sector alone expected to jump by 20% this year. Combine that with rising inflation, geopolitical tension, and silver's historical performance during economic uncertainty, and you've got a metal that's primed to explode. This pullback, just a blip on the radar for those in the know.
Back in my day when I was growing up, 6% unemployment was a pretty good unemployment rate, and now 4% or so is considered the highest acceptable, and then we have to ease when it gets to that level. So it could have been any of those explanations, and it really doesn't matter in the big picture, because the world is being forced to use excessively easy money in order to manage all the debts that we've taken on. You can't have trillion or tens or hundreds of trillions of dollars of debt, depending on which country that we're talking about, because normal interest rates means a rising and debilitating cost of interest on the debt that you've got out there. So your interest rates can go up for a little while if they need to go up in order to stabilize some aspect of the economy, but they have to come right back down, because otherwise the interest cost eats governments and corporations, and to an extent individuals alive. It destroys the economy by making a growing number of entities insolvent. So we always had to have lower interest rates again, and maybe this is just when it has to start happening, because they've run out of what they consider to be runway, with the higher interest rates. So, whatever the cause, interest rates going back down from here carry with them some pretty serious risks. And one is that, we found out what extremely easy money does during the pandemic, when we increased the money supply dramatically and we kept interest rates low. And in 2022, we got double-digit inflation, almost, according to the official numbers in the US. And in real terms, most legitimate estimates of inflation have it at 12 to 15% in that year. And that's destabilizing. When people see their cost of living go up by a third in the space of 3 or 4 years, something called the trust horizon just shrinks down to nothing. In other words, people just give up on the government because they feel like they've been screwed over by policymakers, because their lives got so much harder. And then they become unmanageable. You get a populace that's basically ungovernable at that point. And we did that once. And people know it can happen because it happened in recent memory. So when the government starts lowering interest rates again, and they're going to have to, they're going to have to get back down close to zero in this cycle. When they do that, it's liable to ignite inflation again.
So why the recent pullback in silver? It's all about market volatility. As silver climbed above $25, some investors decided it was time to take profits, which led to a dip. But here's where things get interesting. While many are hesitating, seasoned investors know this is just the calm before the storm. With short interest in silver at low levels and support holding firm around $31, the signs point to a rebound. The recent dip aligns with gold's retreat, but this kind of profit-taking is exactly what creates opportunities. Remember, when prices fluctuate, it's not always a signal to step back. It's a signal for those in the know to step in. So is this dip a warning sign or a golden opportunity? Let's dig deeper into why this moment could be pivotal for silver.
Yeah. And then you've got AI, which is this huge boom. Everybody's putting up new data centers out there with new, microchips that they've got to buy to run their new AIs. And there's a little bit of silver involved in those microchips too. So that's another big source of demand for silver. So even if it wasn't a monetary metal, it would probably be like copper. It would be something that is the next generation energy metal that is kind of sexy because of that. Energy transition, yada, yada. And silver would be a big part of that. But it's also a monetary metal. So you take those two things and put them together, and then add in the fact that silver is nowhere near its all-time high. Its all-time high is around $50 an ounce. It's $30 an ounce right now. So gold is far above its previous cyclical high, and silver's nowhere near its previous cyclical high, which means the gold to silver ratio is pretty high right now. It takes a lot of silver to buy an ounce of gold. Those are usually bullish signs for silver. So I think that silver might be the one of the big winners in the coming decade, just because somebody's going to be buying a lot of it for one reason or another, and there's really not that much out there. It's already in a deficit. In other words, mines don't produce enough silver to satisfy current demand. So let the deficit turn into a shortage where the metals exchanges just don't have enough silver to deliver when people who hold long futures contracts want actual physical silver instead of cash. And then you have the possibility of, on the one hand, a nice long bull market, and on the other hand, a panic situation where COMEX or somebody like that defaults. And then people realize there is no more free silver out there, and then they buy it for whatever price they can get, and it just goes straight up. I'd give those two possibilities 50-50 right now. Either one is quite possible, and I don't know which one is more probable.
In times of economic uncertainty, precious metals like silver shine the brightest. Rising inflation, mounting debt, and global geopolitical tensions are all driving forces behind silver's increasing appeal. Just look at the broader economic landscape. Inflation continues to erode purchasing power, and central banks around the world are struggling to keep things stable. And as we've seen in the past, when the economy wavers, investors flock to safe havens like silver. David Morgan's insights reinforce this. He sees silver not just as a commodity, but as a hedge against these very uncertainties. When the market gets shaky, silver tends to soar. And with more people waking up to this reality, the demand for silver is only set to grow. So while some are still on the sidelines, the savvy investors are already positioning themselves.
Yeah, it's been a buy the dip market in gold, because it's easy to look at what it's done lately and think, all right, it's overbought, it's due for a correction, and that would be totally legit by looking at the charts and everything. But I think a big part of it is those new buyers coming in. You could have a bit of FOMO going on now in the gold market, fear of missing out, because a lot of people have had gold. And, I talk to a lot of people who are in this boat where, gold's on their radar screen. They've been told to look at it and everything. But maybe they bought a little Barrick stock or something like that, or they bought a few silver coins or whatever. They don't have anything like what you would have if you were actually moving into that sector. And so they're spooked right now. They don't know what to do because it's been going way up. They feel like they've missed this move and they don't know whether to jump on board because they'll never have another chance at today's prices or pull back and wait for a dip. I think both of those things are valid points of view since the future is inherently unknowable and both of those possibilities exist. But I think a lot of people, which is the way human nature works, is a lot of people are starting to panic buy in gold right here. And the central banks have just been steady buyers, like I said. So it could be that they're just not price sensitive, even at $2,600 an ounce. They're just they're making this policy decision to move out of treasuries and into gold, and they're going to do it at whatever price it takes to get to their preferred percentage. So all of this is true. It could be that central banks are just not going to be price sensitive all the way up to $5,000 an ounce, or it could be that we get a huge correction when equities tank. And what that means is you should just dollar cost average. Trying to predict a market in the near term, whether it's equities or houses or precious metals or any other commodity, is just it's beyond the ability of a normal person because those markets are full of professionals. And if they can't come to a consensus about what's going to happen in a market, in other words, if there are people on both sides of the argument in that market, and those people are professionals, you can't watch somebody talking on YouTube.
With everything we've discussed, it's clear that silver is more than just a safe haven right now. It's a prime opportunity. But the question is, are you ready to take advantage of it? As John Rubino and other experts are saying, this pullback is a gift for those paying attention. But what do you think? Is this dip a warning to stay away or the chance of a lifetime to get in before the next big run? Let us know in the comments below. And while you're at it, don't forget to subscribe for more insights on how to protect your wealth and capitalize on these opportunities.
And then make a rational decision about timing that market because nobody can really do that. Or if somebody can do it, they're not telling anybody. They're just getting insanely rich very quietly. So I think, and what I say in my Substack over and over again is use low ball bids for corrections and then just dollar cost average otherwise. Just put X amount of dollars per month into something that you want. In other words, either in a mining stock that you like or silver coins or gold coins or whatever, and just buy that much each month. And then really don't worry about prices. If the price goes down, then that fixed amount of dollars will buy you more metal, more shares of Agnico Eagle or whatever. And if the price goes up, your fixed amount of dollars will buy you fewer shares. So you end up with a pretty good average price over time. And I think that's the most rational approach. And it's also psychologically really, it's comforting in a way because you're going to buy some in the future. But you have some and you're going to buy some in the future. So if the price goes down, that means you're going to buy less and you feel better about your future transactions. And if the price goes up, you're not going to buy as many ounces, but what you own in the moment is going up in value, so you feel good about that. So it gives you something to focus on that's positive, no matter what's happening in the world. And the value of that can't be underestimated in investing because things are always happening out there. Some of it's good, some of it's bad. And if you focus on the bad things, there's always a bad thing to obsess about. But if you focus on the good thing that's happening, then there's basically always something that you can look at and go, all right, I made a good decision with this one thing right here, and you feel better about it. Otherwise, investing will drive you insane, because it's incredibly humbling and incredibly stressful. And you make a couple of big mistakes, and then the impulse is just to leave forever and just assume you just can't do this thing. And dollar cost averaging helps with that, because it always allows you to be proud of something that you're doing and optimistic about something that's coming. And so you can be basically happy as you build up your stacks of gold and silver coins and your portfolio of mining stocks.
So here's the bottom line. John Rubino is right. This short-term pullback could be the best buying opportunity we'll see before silver skyrockets. We've looked at the fundamentals, the rising industrial demand, the market volatility, and the economic uncertainties driving silver's appeal. All signs are pointing in the same direction. Silver is on the cusp of a major breakout. Historically, silver has surged after pullbacks like this one, and with experts predicting prices to hit $40 or beyond, waiting on the sidelines could mean missing out. If you're looking to hedge against inflation and market chaos, silver is your answer. But remember, this isn't financial advice. Always do your own research. And before you go, make sure to subscribe for more insights on how to stay ahead in today's unpredictable markets.